we figured out that a gas embargo would hit the industry of Germany badly, and it would really have a huge impact in terms of shutting down sites, unemployment, and of course an impact on our economy too.
As a matter of fact, most of the gas importers have already opened their accounts in rubles with Gazprom.
I think the problem is that the Federal Reserve has not been forceful enough in stating not just what their goal is, 2% inflation, but the means to achieve that goal.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Stocks volatile in European trading after a red-hot U.S. CPI print. Markets fear the Fed has lost control of inflation. European gas prices surge again on lower flows from Ukraine. We're live from the G7 meeting in Germany as Finland's leaders say they support joining NATO. Plus, crypto crash. Terra leads the plunge of so-called stablecoins. Bitcoin falls further below $28,000. Now let's check on the markets because that's really where everything's playing out. And we're seeing a sell-off across the board. When it comes to these European stocks, down 1.7%. Technology, again, down 2%. But actually, if you look at basic resources, they're down some 3%. So all sectors are on the downside. There seems to be a panic on the market about inflation, that a lot of the central banks actually lost control of inflation. Unclear what the ECB will do if we move to parity between euro and the dollar. Of course, this is the main conundrum for central banks, is do they risk plunging their economy in a recession to deal with inflation if inflation keeps on going up? But we're also seeing a huge sell-off in Bitcoin, 2770. And this is the picture that we are trying to understand. Is it crypto that's leading stocks lower? Is it just a general sell-off? We're seeing yen, of course, rally. And we're also seeing dollar rally as some of these havens are getting a bid. Then Russia oil revenue up 50% this year, despite the boycott. This is according to the IEA. One other thing we're trying to figure out, and we'll get the European map, is whether Russia is now selling to Asia. We knew that it was much more difficult for some of these supplies because of the pipelines to be sold to China and other. You can see Russia there right at the back of the map on where these supplies go, but an interesting, of course, red headline crossing the Bloomberg terminal. So the UK is down some 2%, the DAX down 1.8%. Also interesting to look at what Mario Draghi, who's currently in DC, was talking about when it comes to gas. The two economies that are most dependent, of course, on Russian oil and gas is Germany, so the DAX and the FTSE MIB in Italy, and both of them are saying different things. So Mr. Draghi is saying maybe we could pay in rubles. That's against what the EU said. And then one of the German ministers saying that actually they can survive certainly on a shorter term without this Russian gas. Now let's get straight to a developing story. Also, Finland's highest ranking policymakers threw their weight behind an application to join NATO expected within the coming days. Now for more, we're joined from the G7 meeting by Bloomberg's Europe reporter Maria Tadeo. So Maria, the fact that Finland is now deciding to join NATO, and we heard from the Prime Minister and the President there, what does it mean for the new leg in the war? How does Vladimir Putin take this?
Yes, Francine, and you know, usually we hate cliche expressions, but this really is history in the making. This decision by Finland, announced just an hour ago by the President of Finland, but also the Prime Minister, saying they've looked at the different options, they've assessed every security possibility for the country, and they now believe that Finland should join NATO. And by the way, they say it should be as soon as possible without delay. Now, of course, if you look at this in the bigger picture, this is a direct repercussion of the war in Ukraine. This is a complete watershed moment for Finland. It is undoing decades of foreign policy. But also, if you go back to the initial response of this war, Russia said it did not want to see NATO expansion. And this is exactly what it will get. This is Finland, but Sweden could come next. The other thing here, Francine, of course, is that at one point, Finland was floated as a model for Ukraine, a country that would be so-called neutral. The Finnish, by the way, they hate that expression of neutrality. Nonetheless, we see now that Finland is not only far from providing a model for Ukraine, it's now joining NATO. So it's a complete U-turn of things here. It really is a spectacular turn of events over this. Now, the question going forward is how will Russia respond to this? Remember, there will be an interim period in which Finland applies for it, becomes a candidate country to the alliance, but it's not a full-fledged NATO member of it. It's not backed by Article 5. And I guess you could presume that on that interim period, they will ask allies to provide similar guarantees, while, of course, the paperwork gets done ahead of that NATO summit in Madrid at the end of June.
Great. Thank you so much, Maria Tadeo, there with the very latest, of course, on this big developing story. Now, to look at the markets, we're joined by Anita Tana, head of EMEA equity sales at Barclays. Anita, thank you for joining us. What a day to come on to talk about the markets. I mean, I'm looking at everything, and it's just getting slammed. Copper dropping below $9,000 a ton as some of the metal demand concerns begin to mount. Why are markets so freaked out?
Yeah, so I think before we talk about why markets are freaked out today, it's worth thinking about the construct, the framework within which we're operating. 6 months ago, we were in a period of peak liquidity, peak multiples and peak earnings, and the rates and inflation narrative and the aggression and the aggressive way in which that's played out in the last 6 months or so has clearly set us up for a difficult construct. Yeah. Now, yesterday, I think people were hoping for a weaker inflation print from the US, and actually that's come in a little bit stronger than expected, and it's got the market quite concerned about the rate of rate hikes, I guess, over the coming months. And I think that's, again, hit growth stocks, but also hit risk overall, as you quite rightly highlight.
So, Anita, is there a worry that actually there's a policy mistake coming from the Fed, also because they took that 75 basis points off the table? Yeah, so policy mistakes, and I guess the broader narrative around the collective rate hikes, whether it be the Fed, whether it be the Bank of England, whether it be the ECB, are clearly the theme of the day. And for sure, the market is concerned about the pace at which the Fed is moving and the pace at which the Fed may need to move to get inflation under control. So that's absolutely the point in focus. So, are you expecting more of a correction from this point? Again, we're unclear whether the ECB, for example, can hike rates, giving the proximity to Russia and the proximity to a possible recession. So is it currencies that will take the brunt of it? Or are we going to see like parity on euro dollar? Yeah, so I think the key here is that investors have been forced into a very, very narrow group of trades, right? Whether it be strength in the US dollar, whether it be certain sectors within the Euro stocks, so energy, for example, and whether it be underweights in other areas. There's consensus positioning all round, and the pace at which rates have moved, the pace at which inflation has moved, has pushed everyone into the same trade. So I think risk unwind is the theme of the day. I mean, risk positioning, if everybody does the same thing, it makes me so nervous, Anita. Don't say that. No, you're absolutely right. I mean, you're seeing just this huge, huge move. Look, copper dropping below $9,000 a ton. I guess, are we now pricing in a world recession? Or is the market pricing in certain parts of the market, everything going ugly? I mean, recession is clearly the topic of the day. As you say, it all comes back to where we were and where we're going to as it pertains to rates, as it pertains to inflation, and as it pertains to getting that all under control. So for sure, that's going to be the topic of the day, and it's going to be discussed in markets. Europe, in particular, is the area where we see could be most exposed to a technical recession, just given the pressures for the consumer for Europe and the UK in particular. So they've had a lot to contend with, right? Whether it's checks running out from fiscal stimulus post-COVID, whether it's energy price inflation, whether it's food inflation, goods inflation. So this pressure that's coming through for the consumer in the UK and Europe, but also globally, is clearly the point and focus. And that's before we see the impact from rates. Anita, stocks were cheap. So they're no longer cheap given I guess, the concerns we're facing, right? Yeah. Yeah. So it depends which parts of the market you look at, right? So I think the ends of the market that have been hit particularly hard are those that were on very high multiples. So the growth stocks, essentially. And that derating has potentially got a long way to go. We've seen 12 years of fund flows going one way into one group of stocks, so that unwind could take quite a period of time. Anita, today is also the day where we actually launch our UK website, so congratulations to everyone in BN and to everyone who's worked on the website. But Anita, we commissioned basically this huge study on levelling up and the fact that Boris Johnson had promised the UK to not only, create wealth in London, but in other parts of the country, and that hasn't really panned out. What does it mean for your level of exposure or appetite for UK stocks? Yeah, so I think that's an interesting point. It depends which UK stocks you're looking at. If you're talking about FTSE 100 stocks, they've got significant exposure to overseas earnings, right? And within there, if we think sectorally, there's energy within there, basic resources within there, so traditionally seen as inflation hedges,
but on the flip side of that, there's staples and there's pharma stocks, which are quite defensive. So the FTSE 100 has actually outperformed quite dramatically in the last 4 or 5 months or so. It's been one of our key recommendations. Now, what you're talking about is the potential impact for the consumer and the domestic economy. That's the FTSE 250 that has big gearing into that, and that's had huge underperformance thus far. And I guess the concern would be that that could continue.
Anita, thank you so much for joining us today. Anita Tana, their head of EMEA equity sales at Barclays. Coming up, as quickening inflation, supply chain snarls, and Europe's energy squeeze unnerve the market, French water and waste treatment giant Veolia seeks to reassure investors that they can ride out macro volatility. Well, we'll be joined by the COO, Estelle Brachlianoff, next. Plus, as Bloomberg UK launches, we'll also have a great conversation with the Legal and General Chief Executive, Nigel Wilson, and economist Jim O'Neill. That's coming up a little bit later, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Veolia reported a jump in quarterly profit and reiterated its growth forecast for the year. That's following the acquisition of a large part of rival French utility Suez in January. Now, the water and waste treatment giant is confident it can ride out COVID resurgence in China and rising energy costs in Europe. Now, we're joined by Veolia's COO, Estelle Brachlianoff, who will take over the role of Chief Executive from July the 1st. So, Estelle, first of all, congratulations on, of course, a new appointment. Talk to me a little bit about some of the challenges that Veolia will have to face. How do you see the energy complex playing out?
I guess we've had a very good start to the year with very solid Q1 result, as you've mentioned, and the 7.6% growth in EBITDA, which I'm very happy to be having today delivered. And second good news before I talk about the challenges is really that the merger is really well underway with the combined team across the globe and with Suez and Veolia merging together and the first delivery of the synergies in line with our annual targets. And in terms of challenges, I guess we are quite a very resilient as well as very able to react type of company. In terms of inflation, it's obviously for us a focus of attention, but we are very well protected altogether, as we've seen in the first quarter.
So does that mean hedging? If it gets much worse, if we actually have an oil embargo between the EU and Russia, what does it mean for Veolia?
So the reason why I'm very confident about inflation, which is neutral or even slightly positive for Veolia, is a lot of our contracts are indexed. We've been able as well for the non-index contract to pass a very good price increase throughout the last few months in the US, in Europe as well. And in terms of energy, we are hedged. So we have 95% of all our supply for energy for the year, which is already bought. So security of supply for us is a key paramount, and it's been very, very important for us throughout the year, and we're very happy that his hedging policy was very paramount this year.
Estelle, when you look at Veolia being affected by the resurgence of COVID in China, how will that play out? And is it supply chain concerns that you have that's affecting a lot of other companies, or is it really more targeted to some of the areas in lockdown?
When I mentioned, the job Veolia does is actually supporting services and essential services to usually local populations. So we are not at all a manufacturing company, for instance, which has a high dependency on supply chain and worldwide supply chain. So we are very multi-local in that respect, and that protects us from many of what's happening in the world today. So in China, we don't depend on anything but Chinese operators to serve Chinese needs to a large extent. Of course, we've seen some slowdown in the growth due to the lockdown in Shanghai, but that's pretty much it so far.
Talk to me a little bit about some of the other things that also you need to manage, which, Veolia is, for example, in charge of several district heating systems in Central and Eastern Europe. What does the ban on Russian coal mean? What does the relationship that the EU will have on Russia affect some of those contracts?
Very simple answer, we don't buy Russian coal. So we are not affected by that. And again, as I said, we've secured all the other sources of energy supply for the entirety of the year. And we are progressively as well moving to alternative fuel. And actually, we have an opportunity with all Veolia does to help with the security of energy supply in Europe and in the world, because what we do as a business, part of our business, is to produce locally sourced, sustainable, affordable sources of energy and materials as well. Yeah. How do we do that? We produce biomethane, we produce alternative fuel, we produce materials from recycling electric car batteries, the methane we produce from a wastewater treatment plant or landfill gas. So as you can imagine, we are part of the solutions to this strategic need to basically get rid of importing fossil fuels.
So is that in preparation for a cut in Russian gas supplies?
Actually, today, again, we have everything hedged for the year. I'm thinking of the offers Veolia can offer to our customers. And, you know, if we gather forces, we actually can speed up with delivering these locally sourced sources of energy, which we can produce in every single of our countries. And in a way, it enhances the need for our services across the globe.
Wonderful. Estelle Brachlianoff, thank you so much for joining us. Veolia's COO and incoming Chief Executive Officer. I have to say also with a great fashion sense, given we're both wearing black and white. Coming up, the earth shakes for Terra as a stablecoin proves to be anything but stable. We have a crypto update for you next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, stablecoins are failing to live up to their name amid a collapse in the algorithmic tokens. Cryptocurrencies have steadied this morning, but the woes of the Terra USD stablecoin actually triggered a flight from many popular digital tokens. Now, for more on all of this, we're joined by Bloomberg's Emily Nicole. Emily is our crypto czar. I love speaking to you because you make us so much smarter, Emily, on what exactly is going on. I mean, I just look at it and go, wow, what is going on? Bitcoin, you know, below 28,000. What has been going on in the crypto space in the last couple of days?
So we've seen a bit of action all over the place. Initially, it's been a major slide for Bitcoin, especially today. It's gone down to its lowest point for quite a while. And that's something that it doesn't usually do, actually. Going down to a low past the year before has only ever happened once before, so this is quite a big deal.
It feels different as well, isn't it? It feels like a slide that I don't know if it's trying to find a bottom, or I'm not sure whether it's crypto that's giving momentum to stocks or the other way around.
Yeah, usually there's a bit of a back and forth between Bitcoin and the tech stocks. We've been seeing increasingly strong correlations between Bitcoin and tech stocks over the last few months, indeed. And so that argument of Bitcoin as inflation hedge isn't really working out so much at the moment. But this week in particular, it's been unique because we've seen a knock on to stable coins as well, like you mentioned before. Coins that are meant to hold a strong peg to the dollar normally. So they're meant to be flat value, not volatile, a safe store of wealth when you don't want to leave the crypto ecosystem, but you want to be able to make sure your money stays at the value you want it at. And those have been falling off their pegs left, right and centre, with some of the biggest stable coins in the ecosystem falling as low as 20 cents at one point yesterday. So it's really big damage. So,
Emily, does it recuperate from this damage, or are there any ramifications, you know, longer term once we get through this?
So if we look at the one that fell really, really low yesterday, that would be UST, which is backed by Terra. Yeah. That one, the founders are now trying to scramble to find outside funding to basically bring that peg back up to the dollar. The way that stablecoin is managed is using a combination of algorithms and trading with another token on its network called Luna, and that usually tries to keep its peg done using basically complex maths at $1 rather than having a bunch of real dollars behind it. Unfortunately, because that process hasn't worked out for them now, they're now trying to find real dollars to back it up. They're only seeking about 1.5 billion at the moment is what we're understanding. But to be honest, what we're hearing is that that's not even going to be enough. They're going to need to get up way more than that to get it back up to $1.
So where are they looking for funding? I mean, and if you're a retail investor, you're not protected, right? Or does it depend on the jurisdiction?
you're not protected pretty much anywhere. I don't think there's any rules anywhere at the moment that would protect people from stablecoin investment. The UK is actually one of the very few places where they've put out rules that may come into force in a year or two that would seek to provide some protection for stablecoin issuers. But at the moment, anyway, there's no protections at all. Just like with the rest of crypto, any money you put in is entirely at your risk. In terms of whether or not where they're looking for that money, for that dollar, they're going to, the who's who of crypto. Any investor that's made its name is pretty much on the list, is what we're hearing. A few of those have already said, no, we're not interested in participating. Yeah. So, time will tell as to whether or not they're going to be able to get that 1.5 billion they're seeking.
How many calls do you think Mike Novogratz got?
Probably a lot with his lunar tattoo.
Probably a lot. We need a picture of the lunar tattoo, actually. Emily, thank you, as always, for making us smarter on cryptocurrencies. Now, coming up, our flagship new Bloomberg UK site has launched. It was launch day today. We talk UK growth, we talk economics, we talk politics next. This is Bloomberg. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and for the next 30 minutes, we're going to be focusing in on the UK economy, on UK finance and UK politics, because Bloomberg UK, at Bloomberg UK on Twitter or Bloomberg #UK on the website, has launched today, and our 500-strong newsroom here in London will keep you updated on all of the news you need to know on the City of London and beyond. Now, there has also been no shortage of talk about the so-called levelling up of the UK. Boris Johnson has called it the defining mission of his government from day one. The goal, simply to balance what many see as a two-track UK economy, London and all of the rest. What we've heard less about, of course, is how successful it's been, and even how to measure that success. Well, Bloomberg has crunched the numbers and broken down how well the UK has been levelling up since 2019. Now, let's look at three of our metrics: salaries, home affordability and productivity. Of all UK constituencies, we have a great map. 91% are doing worse for salaries in the UK. Home affordability is worse in 88% of constituencies since 2019. Meanwhile, productivity has improved in about half of UK constituencies. Well, joining us now for more is our news director, David Merritt, also my co-anchor of our new podcast focused on, well, London and the UK. But Dave, I'm excited about this. First of all, congratulations to you and the team on a successful UK website launch. I mean, this is huge. The levelling up we were promised is just not working in the UK.
That's right, and this has been a government slogan, obviously, now for several years, and no one's actually dug into the data with the depth and breadth that Bloomberg is publishing this morning. We've been spending months looking across the UK around 12 different metrics. You mentioned some of them there, and the results, when you compare where we are now to 2019, makes some pretty alarming reading if you are the Prime Minister. The salary gap, it's widening actually in 9 out of 10 constituencies. Home affordability, so crucial obviously for everyday people, that's getting worse nearly everywhere. And public spending, which we haven't mentioned, per head, that was supposed to be the kind of the lever to level up. That's actually fallen behind London in every region of England.
I mean, this is terrible for people that actually don't live in London. How much of this is the government not doing enough, and how much of it is outside forces, inflation, energy crisis, and the cost of living going up?
Well, of course, and the government will say, look, we've had a pandemic, we've had
the government will say, not us.
Yeah, not our fault, a huge economic shock. But of course, that doesn't explain the disparities around the country. Really, the gap is widening between London and these areas of Britain that were promised a new deal under this government. And of course, there are these other factors like Brexit sitting in the background. The Office for Budget Responsibility is saying that's going to shave various percentage points of GDP growth in the long term and is contributing to the cost of living crisis. And of course, it's this government who insisted on pushing Brexit through. And we know it's feeding back into inflation, which, as we've seen from the GDP numbers this morning, is contributing to a contraction in the economy. So it's not very easy for the government to step back and say not all of this is any of our doing.
Dave, I'm really, really excited excited about our UK launch. This is a new website, and it's basically getting the power of the Bloomberg and trying to explain for a UK audience or an international audience interested in all UK stories. What do we have on today? That's
right, exactly. So, you know, we've got our big analysis of the UK economy there, and we're really zeroing in on all those subjects dear to our hearts here at Bloomberg. You know, finance, the City of London. We've got a great interview with Alison Rose, the Chief Executive of NatWest, talking about the fraud, the pandemic levels of fraud she talked about in the economy. We've got an interview with policymakers at the Bank of England talking about the needs for interest rates to go up. We've got a great video that you were involved in this with the Soho House founder, Nick Jones, talking about his business. That's our Bloomberg Breakfast series. So a real wealth of data about and information about business, finance here in Britain.
Yeah, breaking news. Dave and I also have a podcast where we spend a lot of time talking about Paddington. And this is like a poll on social media. Go and check out Dave Merritt, at Dave Merritt on Twitter, and tell me what you think about his picture. A, he's worth a follow. The picture is just
name
gold.
That person in one, basically. Yeah, prizes.
Twitter gold. Thanks
card.
to our David Merritt, our news director. Now let's get straight. Thank you, David. Let's get straight to the Bloomberg First Word News, focusing on the UK today. And here's Leanne Gerrans. Hi, Leanne.
Hi, Francine, and thank you. The Bank of England's Deputy Governor has told Bloomberg that the bank will have to raise interest rates further to control surging prices. David Ramsden also warns there is a risk that the UK's worst inflation crisis in decades will take longer to ease fully. Now, the UK's biggest supermarket is planning to get on the work-from-home trend. Tesco has teamed up with IWG, the flexible office company that owns the Regis brand, to convert excess supermarket space into a work hub. IWG has called the shift to hybrid working irreversible and plans to add 1,000 new locations to its wider network in 2022. And Brexit hamstrung the UK's efforts to create a thriving crypto industry, but the sector may be the country's ticket to regaining lost ground. That is the view of more than half a dozen executives of digital asset companies. They're expressing cautious optimism about the UK's prospects. They cite a string of recent initiatives to stem an exodus of crypto firms. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. You could work from a supermarket, Francine.
There you go, Leanne. The news you can use right here on Bloomberg Surveillance Early Edition with Leanne Gerrans. Thank you. Let's get more about one of our top stories this morning. As we mentioned, the UK economy unexpectedly contracting in March as the cost of living squeeze saw consumers cut back on spending. Well, to dig a little deeper, we're joined by our UK economy reporter, Lizzie Burden, who also had this great, fantastic interview with Dave Ramsden that moved pounds. So I'm really excited about that. But Lizzie, first of all, let's talk about UK GDP. What did they tell us?
Well, we had this unexpected contraction of 0.1% in March, which means for the quarter you had growth of 0.8%. If you look back at the retail sales data, they showed that consumer spending was struggling to bear up against surging inflation. So Bloomberg Economics reckons in the second quarter you're going to see a contraction, but not in the third, which means the UK will narrowly avoid a technical recession. But it really does underscore the headache for the BOE because they've got to manage surging inflation, but also you're seeing this weight on the recovery.
Yeah, technical recession. I mean, it's always like a technical recession, so don't worry about it. But then the cost of living is an absolute nightmare. Now, you had a great interview with the BOE Deputy Governor, and basically he's really worried about inflation.
He is. He says that we constantly underestimate the labour market and its resilience, which means we'll get upside risks on inflation, which means we need further tightening from the BOE. He says in June it's going to be an opportunity to take stock, so it'll be interesting to see how he votes. We asked him about the market curve, which of course sees rates rising to 2.5% by 2023. He refused to endorse or refute it, but he says that the bank's gloomy forecasts, which are based on that market curve, are not in themselves going to bring about a recession by making people more negative. He says people will understand the bank isn't talking down the economy.
I mean, do people understand? I certainly know that on the back of that interview, sterling moved.
It did. I think that, well, as Dave Ramsden said himself, people can feel this inflation, and it's really painful, even mostly for the poorest households. So that's the thing.
Lizzie, thank you so much. Lizzie Burden there with the very latest on the UK economy. And you can see actually I think we were just looking at sterling there, and you can see it move on the back of this huge move overall in currencies. We're possibly looking at parity between euro and dollar. And you can see sterling there 129.93. Now, coming up, we speak with the former UK government minister, Jim O'Neill, and the Legal and General Chief Executive Officer, Nigel Wilson, on the UK economy. We'll talk levelling up. Maybe we'll talk a bit of football. I feel like that'll come up with Jim, maybe. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and we're focusing in on the UK today as Bloomberg UK launches. It's on Twitter and it's also on our website. Now, as we've been discussing, the UK economy unexpectedly contracted in March as a cost of living squeeze forced consumers to cut back on spending. It's throwing doubt on the Bank of England's ability to keep hiking interest rates and piling pressure on the Prime Minister Boris Johnson's government to respond. Now, we're joined by Nigel Wilson, Chief Executive Officer of Legal and General, who's led the investment of over £30 billion in the levelling up the UK's regional economies, and Lord Jim O'Neill, he's Vice Chair of the Northern Powerhouse Partnership and former Commercial Secretary to the Treasury. So thank you both for joining us on a robust conversation. First of all, I'm extremely pleased that you two know each other, because I'm sure you've had some robust arguments on what it takes for the UK to level up. But Nigel, we have actually tried to measure the success of the government. We have this great data that's, proprietary to Bloomberg, and it just hasn't worked out. If you look at constituencies, a lot of them are worse off. House is not affordable. What should the government now do to get back on track?
Well, I think they've spent a long time theorising what levelling up means, when actually we need to invest at a huge scale. And it shouldn't just be Legal and General, who's been on this levelling up journey for over a decade now, and working with Jim and his colleagues up in the north. We've just underinvested, so it's no surprise that your data is telling us exactly what we are experiencing out there, that there's just massive structural underinvestment in the UK, and that's what we need to sort out.
Yeah, Jim, I mean, first of all, do you agree with that? And two, if you do agree with that, why hasn't the UK government spent more? I mean, they're blaming, of course, inflation, the cost of living on external factors. What could they have done to make levelling up a reality?
So first of all, from the very idea that Nigel and I would argue about anything is like, that kind of a bit of a blow to start with. But listen, I think it's very complicated to give you a quick answer. I mean, the most important thing is, all of the North is not just one place. And linked to what Nigel said about how he's been on it for 10 years, there are some small parts of the North which I bet your data doesn't show is doing so badly. I think central Manchester and Leeds in particular, and some of the already reasonably wealthy suburbs have done pretty well the past 5 years, probably even better than London. But in general, it is a fair statement. And it's because the governments have been completely half-hearted and far too focused on the PR of this agenda. And given the scale of where these challenges come from, which go back to when Nigel and I were in our, our shorts, the challenge to address this is enormous. It's more important than anything else to do with UK economic policy. And so you can't just play at it. You're going to be really serious.
Jim, let me just break down some of our metrics, right? Because we have this research that basically Bloomberg News has done. So these are our metrics: salaries, home affordability, and productivity. And of all UK constituencies, 91% are doing worse for salaries in the UK. I think we have that graphic that we can bring up again. Home affordability is worse in 88% of constituencies since 2019. And on a third metric, productivity, it's improved in about half of UK constituencies. Now, I didn't mean to say that, you two were arguing, but Jim, is there something that the UK government should do now? Actually, I wish you were, to level up, to make this better.
Listen, I think, the levelling up, the much delayed levelling up white paper, all 300 odd pages of it, is kind of like a PhD thesis in what one would write about what you need to do. apart from, crucially, education, where, frankly, it's pathetic. But a lot of it in there, and it has all the hallmarks of Andy Haldane, who was heavily involved in it, is actually quite substantive. But as we see with this government, and frankly, another part of the problem of life here and elsewhere, with many governments of the time, what they talk about and what they actually do, there is an enormous gap between. And so they have to need to be really serious about delivering on what the Levelling Up white paper involves. And that requires massive devolution. We've only just started it in the best places like Greater Manchester, but we need huge amounts of devolved responsibility, much more infrastructure spending that Nigel's one of the, well, not one of, the leading pioneer in the private sector. We need huge efforts on education and skills. And we need a lot of people in these local areas to stop thinking life owes them because of some time in the past when they had a great industrial base, and try and get something that makes them special for the new complex way the world is evolving. And, you know, these are big, big challenges, but everybody's got to be really serious about them if they really want to have a chance of succeeding.
Nigel?
No, it's a massive investment required. And we've worked with a number of different areas, but we've only worked with a sample. And Jim's talked about Manchester. We've done outstanding work in Manchester. If you went to Alderley Park, which we bought at AstraZeneca, that's got 250 startups on, 2,500 new jobs in that area. Leeds, which I'm in on Tuesday, and I'm in Birmingham on Monday. There's pockets of fantastic work going on. The Andy Streets and the Tom Reardons of this world are showing real leadership in Leeds and Birmingham, and indeed in Manchester, Andy Burnham and others. So it's not political in that sense. It's actually people, and you have to work hard to get and not be entitled to stuff. And there's too much entitlement going on, and people remembering an historic
past. But the infrastructure spending, I mean, that's not entitlement. It's just the government not spending enough on infrastructure that some of those regions need.
Yeah, I agree. And I think there's been crowding out rather than crowding in. You know, I think, you know, we should have had intra-city expenditure, not stuff like HS2, which is, in my view, and I don't know what Jim's view is on it, just a huge waste of money. It would have been better off to give that 100 billion and give Manchester 10 and Birmingham 10 and Leeds 10 billion to actually improve their infrastructure. And that would have been a much better way to deliver economic growth, and then crowd in money from people like ourselves, because we could easily spend another 30 billion. It's not a, we're constrained by the projects, not by the capital. And that's a lot about ambition at a local level being coupled with support from the central government. And at the moment, the outcome is a very lengthy report, parts of it which are excellently well written, but it's, you know, our version of that document's about 20 pages, but it's 20 pages of what should be done, not actually, you know, the history of what has not been done.
Nigel, thanks so much. Nigel Wilson, Chief Executive Officer of Legal & General, Jim O'Neill, Vice Chair of the Northern Powerhouse Partnership. Both stay with us. They were way too polite, and they've got far along too well. So next up, they're going to have a fight. Coming up, we continue the conversation on the UK economy with the former UK Government Minister, Jim O'Neill, and Legal & General Chief Executive Nigel Wilson. Both of them stay along. This is Bloomberg.
I'm feeling okay about the future. I'm very conscious of, you know, the challenges that are facing people, but I think there is a lot of resilience in the banking sector and in the corporate world that can help. You know, there is a bit of a buffer there that can support. So I think we just need to navigate that, and hopefully inflation will settle down. I do think things are exacerbated right now because of the invasion of Ukraine and what that's doing to supply chains and the geopolitical impacts. But I think it's just really important to try and give good advice, sensible advice, and plan sensibly.
Well, that was the NatWest Chief Executive Alison Rose speaking to me on the latest episodes of Leaders with Lacqua. Now let's get back to our all-star panel. Nigel Wilson, Chief Executive of Legal & General, and Jim O'Neill, Vice Chair of the Northern Powerhouse Partnership, both still with us. We were talking about levelling up and how, of course, this Bloomberg data says that it's not as good as it could have been, and that's probably a euphemism. Nigel, you also reminded me in the break that this is not only the politicians' fault, it's also private money not getting to the places where it should be. But working from home, has it changed that? Because it's actually cheaper to hire someone that doesn't live in London.
No, I don't think anything's changed in one sense. The government hasn't been doing very much. They've got a plan to start engagement. They're behind their plan. We're executing everything we thought we could execute. And I think you'll see in the next few months we have a few very big announcements about what we're going to do in further cities across the UK. But we're still slightly a lone voice, and we need more growth equity, we need more infrastructure spend by the government, and we need more private sector firms stepping up to invest in there. But we also need the universities stepping up and actually just not sitting there waiting for things to happen, being very proactive and getting out and investing and trying to become like MIT, Harvard and Stanford, which are issues we talked about before. And Jim, this is, I mean, on education, then I want to get back to maybe healthcare. But Jim, this is something that you've been trying to, do a lot more for. It's universities in the north. Yeah. I mean, what Nigel's just touched on there is very dear to my heart. You will see in the next couple of days, possibly over the weekend on Monday, an announcement about the so-called first close of Northern Gritstone, which I am the chair of. It's a very new, really exciting project, right in the core of everything we're talking about, which is a patient capital vehicle, not a fund, which is going to be devoted towards investing in, investing in startups coming out of northern universities. So it's very ambitious, but it's to try and be directly getting more great ideas coming out of northern universities to end up doing for their locations what MIT has helped do for Boston, as Nigel touched on, but also to be a cog in the wheel of opening up all of this, what has been a vicious circle, starting to become a virtuous one. And it's one of the most important and certainly most interesting things I've done in my career, and I'm very excited about it. And Jim, congratulations on, of course, this tremendous effort. Does this change the way that the Bank of England should look at things? I mean, leveling up. In the process of getting our first close, that in itself is hugely revealing about the very strange nature of the UK investment world. The UK prides itself on this huge financial sector, but sadly, and Nigel again is a pioneer, there are so few institutional investors that will truly focus on what Nigel and I would both probably describe as patient capital. They are obsessed with liquidity, and very conventional, easy ways to superficially at least do things. And none of them, or not many of them, are genuine risk takers. And we're really grateful to the small number of institutional investors that are anchoring Gritstone along with others, because without them we couldn't do it. But there needs to be a huge increase in the way UK institutional investors think about these things. Yeah. And the Bank of England and the Treasury, frankly, need to force them to do it, because this is at the core of the UK productivity problem. Yeah. Okay, thank you both for a robust conversation. Nigel Wilson, Chief Executive Officer of Legal & General, Jim O'Neill, Vice Chair of the Northern Powerhouse Partnership. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kailey Leinz will be in New York. Anna Edwards in London. Huge moves when it comes to the markets. We're seeing definitely a risk-off mood. If you look at what exactly is going on, stocks still tumbling amongst inflation worries. This is the biggest thing that we really need to keep an eye on. Stubborn inflation in the world's biggest economy, bolstering the case for more aggressive monetary tightening by the Fed. And we're seeing a rally in dollar, a rally in yen as people go to safe havens. This is Bloomberg.
It could be a volatile period in the short term, of course, because there are still many growth challenges ahead. But this cycle looks quite different.
We have seen a lot of froth come out of the market.
We're not seeing full panic, as I would call it.
When fear abounds is when you look to take advantage of that.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, May 12th. Our top stories today. Cryptocurrencies keep dropping following the collapse of the Tether USD stablecoin. European stocks are down and Wall Street's sell-off is set to resume. Shares of Disney are lower. Streaming subscriptions were better than expected, but the entertainment giant tempers its outlook for the rest of the fiscal year. And Boris Johnson's flagship plan to fix the UK is in trouble. The Prime Minister promised to reduce regional inequalities, but things are going backwards. We bring you exclusive Bloomberg analysis. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And European markets dropping, US futures dropping, Kailey, not to mention cryptos dropping.
Yeah, everything seems to be dropping, Anna. That certainly was true in Asia overnight, where pretty much every single regional benchmark was lower on the day. The MSCI Asia Pacific Index as a whole falling about 1.7%. And your real underperformer, maybe no surprise, given what we have seen in recent days, was technology. The Hang Seng Tech Index falling 3.8% in the overnight session. There is one individual stock I want to point to in particular, though, and that would be SoftBank, which, of course, has the Vision Fund, which posted a record loss of $20.4 billion in the latest quarter. The reason why is a lot of those technology names that have gone sour, the likes of DD Global, Alibaba, Coupang, all of that weighing on that stock, which fell about 8% in Japan overnight. Speaking of Japan, I would point out one interesting thing happening in the FX space today, and that is that we are seeing a substantially stronger Japanese yen, stronger against the dollar by a full percentage point. We're back down around 128.62 at the moment. It is the only outperformer against the dollar in both G10 and in Asia. Interesting that it's catching a bit of a haven bid today, Matt, because that isn't what we have seen as of late.
Yeah, that is interesting because I just noticed that the Bloomberg Dollar Index itself is gaining right now. You can see S&P futures down about 0.2%. So investors are certainly selling risk assets, but they're buying bonds. That pushes the yield down to 2.84%. They're buying the Bloomberg Dollar Index, as Kailey said, against everything except for the yen. And that traditionally is considered a safe haven, even if we haven't seen it acting that way of late. Bitcoin is certainly not seen as a safe haven. Right now, down almost 3%, well below 30,000 to $27,640. And the question is, how much does this have to do with the collapse of the algorithmic stablecoin Terra USD? We'll be talking about that throughout the program. Anna, what do you see in Europe?
Yeah, it's interesting, isn't it? How much is contagion between those crypto assets and how much is them just all responding to the same fundamental driver, if you like, and tighter rates. Let's have a look then, Matt, at Europe. And European equity markets are considerably weaker, down by more than 2% on European stocks. Beware, though, some of this is backward looking. Of course, some of this is pricing in the weakness that we saw on Wall Street yesterday, a concern around inflation, a concern around higher rates. We've got lower yields, though, on treasuries, lower yields on a lot of European debt. So maybe inflation concerns not front and center. Growth concerns may be moving more front and center, but no sectors in Europe are in positive territory today. We are considerably weaker here. Let's have a look at some of the other assets on the move for you, or within the equity space. I've got basic resource stocks, and here's where we see a lot of expression of that concern around global growth. We've got iron ore prices weaker, copper prices weaker, and so the stocks related to that go down. Here's a different story, though, the geopolitical risk attached to this particular commodity. This is the European natural gas benchmark. That particular price jumping just 12%, in just 1 day. So this is 1 day's move, another substantial increase in that natural gas prices. We've seen flows from Russia through Ukraine actually moderating. Here's the euro, 104.29. With that dollar strength that Matt was talking about and a bit of yen strength that Kailey referenced, we're on parity watch when it comes to the euro. So just putting it in there just in case it happens. We're well away from it now, but 104.25 perhaps getting closer. And Siemens is in focus today, the German industrial giant, down by 6.5% after 170 years, winding down their Russian business. Also concerns about energy policy, of course, across Europe and what that would mean for the German economy. More on that a little bit later.
That's a long time to wind down a business. 170 years. Wow.
That's how long they've been there. Yes, they were winding it up for a long time.
I see.
But
Okay.
now
Got it.
the politics has changed. Let's talk about where we are on Russian assets. Then we've got Russian assets in focus once again, of course, because of war in Ukraine. And interesting to note that one of the reasons we're seeing energy policy being talked about so much in Europe right now is about Russian oil, reliance on Russian oil. We saw a 50% increase in Russian oil revenues year to date so far this year. And so that really underscoring the way that Russia is continuing to get that money in on the oil front. Although in the most recent month, Kailey, that was falling. And that's when we've seen perhaps self-sanctioning and some parts of the world, including the US, stopping imports of Russian oil.
Yeah, but not China and India, which is why Russia is continuing to rake in that cash. Now let's take a look at what is ahead today. G7 foreign ministers will be gathering in Weissenhaus, Germany for a 2-day meeting. Then Biden will be hosting leaders of the ASEAN countries in Washington. On the economic data front, after yesterday's hot CPI, we'll get U.S. PPI data at 8:30 a.m. New York time. And finally, Treasury Secretary Janet Yellen will be testifying to a House panel at 10 a.m. New York time. I wonder, Matt, if she'll bring up stablecoins.
Yeah, absolutely. She's been talking about it lately. The U.S. Treasury has taken note, and cryptocurrencies falling really across the board after the collapse of Terra USD. That triggered an exodus from many popular digital tokens, although, as Anna pointed out, maybe the exodus from those popular digital tokens is what triggered the collapse. Bloomberg Markets Live editor Eddie Vanderwalt joins us now to talk about what could be kind of a vicious cycle here. We didn't see a lot of contagion yesterday, Eddie, but we certainly started to see it overnight and into today.
Yeah, absolutely, Matt. You know what? I've even heard some obituaries about Bitcoin being written yet again, even though this space has been through these series of volatilities a number of times now. As you say, we are seeing a little bit of a spread from, you know, the instability of the stable coins. But really, that's a small sector even of that market. It's the algorithmic stable coins that we're talking about. And they are the ones that are, you know, and particularly then Terra, that have seen really an attack and seeing a big drawdown. Now, if stable coins as a group become unstable, if we're talking about you know, if we're talking about some of the larger ones, then I think this would matter. But because we're only really talking about the algorithmic ones, I think Bitcoin can probably ride this out. This is normal high volatility in a highly volatile market in, you know, in a secular bear market. So I'm not overly surprised at the moves that we're seeing.
Okay, so this starts with Terra USD, or it starts with the Fed and tighter policy, but it starts somewhere. And but is it a concern then that if we see it move on to Tether, for example, annoying that they sound so similar but are quite different, and then that would be taken much more seriously than by the market, because that has actually dropped a little from its peg?
Yeah, and look, Tether is a big entity. At the moment in Terra, you know, even at its peak, Terra was something like 18 billion US dollars. The top two, Tether, you know, the top two coins, the top two stable coins make up 130 billion US dollars, and they hold real assets. They hold assets, you know, that are linked to the real economy. They hold bonds. A lot of them. We don't know exactly what is, you know, in the biggest stable coins, but we do know that there are some bonds there. So if they start selling en masse to protect a peg, yes, there could be contagion. And I think the Fed has flagged that possibility before.
Yep, Tether right now trading around 98 cents, so not, in fact, at $1. Eddie Vanderwalt of Bloomberg Markets Live, thank you so much. Let's get to corporate earnings now. Disney reported results that showed its parks are back while avoiding a Netflix nightmare. But CEO Bob Chapek cautioned on challenges to the outlook. Let's get more with Bloomberg's Laura Wright. So, Laura, did Disney Plus give stock bulls something to cheer for, considering Disney is trading at its lowest level since back in 2020?
We'll come on to the stock price in a moment, Kailey, but yes, it did give the bulls something to cheer for. An addition of 8 million subscribers almost for Disney Plus last quarter, taking the total number of Disney Plus subscribers to just shy of 138 million. But if you are to total all of Disney's online content offering subscribers across Disney Plus, ESPN Plus and Hulu, that number becomes 205 million. So the gap is narrowing between Disney Plus and Netflix. The price point for Disney Plus, it's competitive, less than $8 a month, and it's about to become even more competitive with the launch of an advertising service similar to what we saw from Netflix last quarter. Now, the cost of content is heavy. Disney's direct-to-consumer business lost almost $900 million last quarter, double from the same period a year ago. But that said, Disney can fund its future vision of growth with its profitable legacy businesses of the parks and its traditional TV business. But this raises the broader question of those former pandemic winners. Netflix losing 200,000 subscribers last quarter, down 70%. Peloton down 65%, hemorrhaging cash, the perils of a hardware business. Zoom, can it compete with Microsoft, the return to office? For Disney, it's the unknown macro headwind. What impact will that have on discretionary spending and continued rolling lockdowns in China?
Another pandemic darling, really until like the day of its IPO, was Rivian. Laura, yesterday Volkswagen announced they're going to bring back the International Scout brand in the U.S., which viewers outside of America won't know, but it's going to be an electric competitor to the Rivian. What do we hear from the Normal Illinois startup yesterday?
Well, while Rivian is trading up in the pre-market, this is a stock that has fallen 80% year to date, even worse than those former pandemic winners, which we just discussed. But what's going to happen now, Matt Miller? I'm going to turn into Bloomberg's Ed Ludlow, our colleague based in San Francisco, who's conducted some excellent coverage of Rivian. So now that I'm Ed Ludlow and I'm not wearing glasses, what I can tell you is that Rivian, they've reaffirmed their delivery target of 25,000 vehicles for 2022. It was a miss on revenue. The company's still burning through cash while pursuing growth. Elevated supply chain costs, logistics, that's common across the industry, although they think the worst of the semiconductor crunch is over. Interestingly, Amazon, the second largest shareholder, and Amazon has an order for 100,000 delivery trucks. They want to see 10% of those this year. But overall, with the EV industry, we know it will have succeeded the day that Matt Miller has an electric SUV. Forget the financial models, that's the benchmark.
I'll lend you the glasses. It's like Ed Ludlow's in the room. Laura, thank you very much. Bloomberg's Laura Wright with the latest on Disney and Rivian. Now, back to the serious business of European politics at this time. G7 foreign ministers are gathered in Germany to coordinate their response against Russia's invasion of Ukraine. Europe's energy woes are likely to be top of the agenda. For more, we're joined now by from the G7 meeting by Bloomberg's European correspondent Maria Tadeo. And clearly, the news out of Finland, really important to note that they're ongoing with their efforts to join NATO, getting further high-level support there. I'm sure that will be discussed, but front and centre, I'm sure, for these ministers is energy policy.
It will be. And Anna, if we could just take a moment to look at Finland. I mean, this is a spectacular turn of events. This is a country that now says we openly want to enter NATO. They have officially applied for this, both the Prime Minister and the President of the country saying we've looked at every possibility now for our security in our country, and we believe in the face of Russian aggression, it really is NATO. And for me, this is an incredible moment. I mean, it is a watershed moment of defense policy in Europe. They're undoing decades of foreign policy when it comes to Russia. But also remember, at the start of this crisis, before the war, Finland was floated as a model for Ukraine, that Finlandization, that neutral status, which, by the way, Finns dislike that expression. Well, now what do you have? Finland joining NATO. Now, when it comes to this meeting in particular that will be happening today in Germany, of course, the G7 foreign ministers will be attending it, but also the Ukrainian foreign minister, Dmytro Kuleba, will be here in person. We know their demands. We know what they'll ask for. This is about financial help. Ukraine is bleeding cash. They say that on a monthly basis, they need from $5 to $7 billion, and that's just to cover basic expenses. It's about the weapons, too, but in particular, when it comes to the French and the Germans assisting this meeting today, the Ukrainians are going to float once again their EU membership. They've made it clear, okay, we've had a reality check on NATO, but what about joining the EU?
All right, Bloomberg's Maria Tadeo at the G7 meeting in Germany, the northern shores of Germany. Thank you so much. Now, the Senate has added a third nominee of President Biden to the Federal Reserve Board down in Washington. Lawmakers confirmed economist Philip Jefferson as a Fed governor yesterday. And today, Senate Democrats say they expect to vote to confirm Jerome Powell to a second term as Fed chair, because yes, he hasn't actually been confirmed yet. Jack Fitzpatrick, Bloomberg government reporter, joins us now from D.C. And Jack, we know what Washington wants this Federal Reserve to do, and that is rein in inflation.
Yes, and that's one reason that we're on to the slightly less controversial part of Biden's nominees for this. Philip Jefferson actually was confirmed in a 91-7 vote. He was somebody with a lot of bipartisan support. He did emphasize the importance of reining in inflation. And as you mentioned, today is supposed to be the Senate vote before they leave for the week on Jerome Powell. These two are a lot more bipartisan and less controversial than, say, the Lisa Cook confirmation, which needed the vice president's tie-breaking vote to get her across the board on Tuesday. Obviously, we saw Sarah Bloom Raskin withdraw her nomination. They're working on the replacement. Michael Barr is supposed to get a confirmation hearing in committee on May 19th. So obviously, it's a major point of focus for President Biden. He has talked about how inflation is his #1 domestic priority lately. And also, despite all the back and forth on legislation that could address that, he has said it really is primarily up to the Fed's actions as well as the international supply chain issues, the Russian invasion of Ukraine. So while a lot of the political fights may be happening over tax policy in Congress and exactly what the president wants to do, this is where the real focus is. And as for Philip Jefferson and Jerome Powell, these are two of the easier votes for Biden to get across the Senate.
Jack, thanks very much for the update. Jack Fitzpatrick of Bloomberg Government joining us there from Washington. Coming up on this program, more on the collapse in crypto with Antoni Trenchev, co-founder of crypto lender Nexo. Really interesting to get his perspective on what we're seeing in these markets and the contagion risks within and beyond crypto. And Investec economist Sandra Horsfield joins us to talk about the global economy. We'll dive into the German risks around energy, also the UK economy in focus. Plus, check out our new site on all things UK growth, economics and politics. That's at bloomberg.com/UK. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both radio and television. I'm Matt Miller in New York with Kailey Leinz, Anna Edwards with us out of London. Now, we are looking at the world of stable coins, the world of crypto, the drop in Bitcoin, because Terra USD broke the buck in a big and horrid way over the past couple of days. It's an algorithmic stablecoin. Tether is considered a little bit more stable because it's actually asset-backed, although it hasn't really been audited. And it looks like it's come untethered today. We're down at 98 cents. It's the first time Tether has really broken the buck since March of last year. And it's actually been pretty stable throughout the entire pandemic. Ven Ram joins us, Bloomberg cross-asset strategist. And Ven, normally we focus on really plain vanilla things like fiat currencies and CPI numbers, the Fed reaction. But this crypto world is really getting a lot of attention. Is it showing any signs of contagion into the old school markets, the OG surveillance markets?
Morning, Matt. I don't think there's much of a spillover into the traditional currency markets. If you look at the non-dollar currencies, they are all falling today, and that's more got to do with the dollar story rather than anything happening with crypto. Of course, there is the drop in Tether raises all kinds of questions about stability and the store of value of crypto assets, but at the moment, it's all contained.
Okay, and sticking with FX markets then, we do see money into the dollar, into the yen, which marks a bit of a change, doesn't it, from recent haven status. We see money coming out of the pound. There's some politics on that. I see the Foreign Secretary saying that the UK has no choice but to act if the EU is not flexible. This to do with Northern Ireland and the politics there. What do you think is front and centre driving the pound? Is it just the dollar?
No, I think it's more than just the dollar story. I think what is happening is the real yield differentials are coming to haunt the pound. We've moved about 60 basis points in favor of the dollar in terms of the real yield differentials. And that's what is driving the pound lower, and that's what is driving the euro lower this year. Okay. And that's very much still a fundamental story. However, with the euro, there is a possibility that it could acquire a life of its own, and the euro plunging more than we have already seen.
Yeah, and we keep an eye out for parity. Not there yet, but we're watching. Ven, thank you very much. Ven Ram of Bloomberg Markets Live. And for more market analysis, check out the Markets Live blog. MLIV Go, that's the function to use on your terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. Cryptocurrencies keep dropping following the collapse of the Terra USD stablecoin. Bitcoin fell below $26,000 before rebounding. Meanwhile, European stocks are down and Wall Street's sell-off looks set to resume. Shares of Disney are lower. Streaming subscriptions were better than expected, but the entertainment giant tempered its outlook for the rest of the fiscal year. And it will trim spending on movies and on TV shows. And Boris Johnson's flagship plan to fix the UK is in trouble. The Prime Minister promised to reduce regional inequalities, but things are going backwards. We bring you exclusive Bloomberg analysis. I'm Anna Edwards in London. Matt Miller and Kailey Leinz with me in New York, of course. And Matt, European stocks are lower, buying bonds, buying the dollar, seeking havens on a day that seems to have a lot to worry about.
Yeah, absolutely. We do see futures down and some money going into bonds and going into the dollar, also going into the Japanese yen, as Kailey was pointing out earlier. S&P futures off about 0.75%. You can see the 10-year yield coming down as investors buy the paper to 282, 283 right now. The Bloomberg Dollar Index is up, and actually the dollar is gaining against every major currency except for the yen, so that shows you that it's really a safe haven play. Meanwhile, you said Bitcoin dropping below 26,000 at one point, has rebounded a bit, but it's still down from, I think this price is from midnight, so still down from midnight, $27,730, and you really see it across the crypto space, though, Kailey, as we just heard from Ven Ram, maybe it's not showing any kind of contagion yet into plain vanilla traditional financial assets.
Yeah, but there certainly is contagion across all of the digital tokens and all of the stocks really that are tied to cryptocurrencies. You're definitely seeing that evident in pre-market trading this morning. Just take a look at Coinbase, of course, the big crypto exchange. It already has lost 59% of its value in just the last 5 sessions. It's lower by another 7.5% this morning, and you're seeing some big losses as well for the likes of MicroStrategy, another Bitcoin proxy stock, considering it holds it on its balance sheet. It's down a little more than 11%. There also are some more fundamental earnings stories out there. Of course, Disney, which Anna mentioned. On the good news front, you have parks doing really well, streamers, more subscribers than expected. The problem is that tempered outlook for the rest of the year, and that is weighing on the stock this morning. It's down about 5%. It already is trading at the levels last seen in May of 2020. The better story out there, though, is Rivian. Of course, it is the EV maker. It's been dealing with supply chain issues, but still holding firm to its guidance that it will deliver 25,000 vehicles this year, so that giving a little bit of a lift to the stock in early hours, up about 1.6% before the bell, Anna.
Kailey, European equity markets really under pressure today, down by 2.3%. It's a little backward looking. We're reflecting nervousness about inflation in the US that weighed on Wall Street, of course, in yesterday's session. But adding on to that, concerns around growth. And so we see the basic resources sector, for example, really selling off here in Europe as there's concern around iron ore prices and copper prices. Some of those metals have been drifting lower. All that at a time where you see geopolitics pushing other parts of commodities higher. So natural gas prices in Europe up by another 13.5% on concern about Russia relations, of course. Eurodollar 104.31. We were talking about this with Ven Ram a little bit earlier. We're all watching to see whether we get any closer to parity on this one. A lot of dollar strength, a lot of yen buying, haven seeking going on in FX markets today, and other currencies pay the price. Also, the yield differentials he was talking about there. Siemens down by 7% for the German industrial giants. This is a business that's been in Russia for 170 years, now having to wind down those businesses and taking a financial hit as a result. Quick check on the Russian assets, and of course, they are always in focus for us. Also want to mention that Russia has managed to increase the amount of oil revenue that it's secured year to date. It's up 50%. Of course, the early part of the year, first couple of months, maybe looked a lot more like last year geopolitically, and so you might expect that to be the case. But in the most recent month, actually, that revenue line has been dropping as certain parts of the world have turned their back on Russian assets and certainly Russian oil in some parts, Matt.
All right, so we'll continue to keep an eye on that, especially after comments from Mario Draghi seemingly indicating it would be okay to pay Russia with rubles for energy products. Let's get to crypto right now, cratering after the collapse of Terra USD. For more, we're joined by Antoni Trenchev. He is the co-founder and managing partner at Nexo. And Antoni, first off, we understand you were approached by Do Kwon and backers of Terra USD, asked for to support the currency. You declined. Tell us about it and why.
Well, there's only so much I can say about details of a rescue plan, which are still ongoing, and I don't want to intervene in any way. I do wish them best of luck. We made the decision at the board level that we didn't think prudent to get involved at this stage. If they come around with another proposal that we think makes better sense, we might reconsider, but for the time being, we're staying on the sidelines.
All right, so this collapse, and I realize it's an algorithmic stable coin and not the same as an asset-backed stable coin like Tether, but it's been described by some as possibly the Lehman moment for crypto. We're looking at billionaires from CZ to Mike Novogratz to Sam Bankman-Fried who have lost 70, 80, 90% of their wealth in the last few weeks. Is it a concern for the industry at large?
I don't think it's a Lehman moment, you know, obviously not the prettiest of episodes, but we get one to two of those per year. You remember last year we had the China ban, the previous year due to COVID, we had up to 50% declines. This time, I think what is different is that you have a limited number of sellers. What I'm seeing on the Nexo platform, and we have close to 4 million retail users and a very sizable institutional clientele. I don't see them selling anyway the way they did in 2020 or 2021. I think the pressure that Bitcoin is seeing right now, it is the unwinding of the huge BTC reserves that the Terra Foundation had accumulated, and this is what is putting pressure on the market. I'm curious to see whether 25 is going to hold. If not, we might very well revisit 20, the previous all-time highs of the 2017-2018 bull run. But I think by then, at the very latest, large-scale buying will come in.
At what point do you think that would happen?
I think around 20. Well, first of all, when the selling of this foundation stops, which, you know, from our estimates, there should be near. So $25,000 per Bitcoin or 20, worst case scenario, should be the turnaround points.
And we're not too far from that right now. 27,800 or so is where we sit at the moment. Antoni, it's not just those who hold these digital assets, us in financial news, who have noticed this. Regulators are taking note as well. The Fed mentioned stablecoins in its financial stability report earlier this week. Treasury Secretary Janet Yellen was talking about this on Capitol Hill. You have Senator Pat Toomey talking about stablecoins as well. What about the regulatory threat stemming from this episode?
Yeah, this is, to me, potentially the more midterm important thing than the short-term turmoil that we're seeing right now. Obviously, crypto and Bitcoin's opponents are going to make a case out of this that, you know, one company failing or something like this is, you know, an example of the industry as such. That's why I've always advocated that, you know, the good actors within the industry, we should go the extra mile, whether it's in KYC and AML considerations or just talking to the regulators and explaining exactly what we're doing and why this is useful, because it is a fragile industry, and we'll, you know, ramp up our efforts to engage with the regulators even more than until this point, so that we can, you know, potentially prevent unfavorable and unnecessarily stringent legislation.
Antoni, good morning to you. Can I just get some more clarity on the links between various crypto products, and just to get you to confirm what I think you were saying about weakness in Bitcoin? Do you see this as linked to efforts to prop up Terra USD then? So is there a link between what's happening with Luna and what's happening with Bitcoin at this point? Bitcoin at 27,790.
Yes, I think so. What appears to be the case is that the Luna Foundation is essentially propping up the price of USD, trying to reestablish the peg of the stable coin to the dollar in this 1-to-1 ratio that they are aiming to be constantly at. This unfortunately has been breached. And what they are doing is selling Bitcoin for USD, essentially buying up USD. And, you know, they have a vast inventory of Bitcoin, but it is getting smaller by the hour. So this is the selling pressure in Bitcoin in particular, and sooner or later it is going to finish. And then, you know, some of the institutional players that we're talking on a daily basis are waiting for that exact moment to come into and snatch up Bitcoin below 30,000.
Antoni, great to get some time with you. Really appreciate you joining us on such short notice. Antoni Trenchev there joining us of Nexo, and a very interesting to see that exchange, that Nexo has not had any problems related to Terra USD. He says they had no exposure there. Be sure to tune into Bloomberg Crypto, by the way, Tuesdays at 1 p.m. Every week, Tuesdays at 1 p.m. New York time, 6 p.m. London time. Kailey and I co-anchor that program dedicated to looking at the crypto world. Next week, we're going to hear from Joe Lubin, co-founder of Ethereum, and the founder of Consensus, and Kara Calvert, head of U.S. policy at Coinbase. Anna?
It's going to be, fascinating conversations around crypto then for the week to come. Another geopolitical line just to mention as we go to a break here. North Korea may have fired a ballistic missile, according to the Japanese Coast Guard. We're also seeing the Yonhap news agency over in Japan citing Joint Chiefs of Staff over in South Korea on the same line, saying that North Korea has fired a ballistic missile. We'll keep up to date with that. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Airbnb CEO Brian Chesky. That's at 1 p.m. in New York, 6 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. There has been no shortage of talk about the so-called levelling up of the UK. That was Prime Minister Boris Johnson's goal: balance what many see as a two-track UK economy, London and all the rest. And to coincide with the launch of Bloomberg's new UK website, that is the subject of today's Big Take. Let's get more with Bloomberg's Joe Mays. So Joe, 2+ years on into Boris Johnson's rule in the UK, where are we? How leveled up?
Well, we're actually worse off in many ways than when Boris Johnson first became Prime Minister in 2019. The gap between London and the southeast and the rest of the country has widened across multiple metrics that we've tracked in what we're calling the levelling up scorecard. So we've looked at measures such as pay, productivity, spending on public services and transport, and across a plurality, a majority, we're seeing that London and the southeast has continued to pull ahead of the rest of Britain. So clearly this is very disappointing for Boris Johnson, and he's had distractions. There's been the pandemic, there's been the war in Ukraine, but the picture's pretty grim.
Yeah, I was going to say, I'm sure if we asked the government, they'd make some mention of a global pandemic, Joe. I mean, to what extent does that excuse them? I don't know. Maybe that's for the voters to decide. But how did you decide how to measure this? Which metrics to use? Because this whole concept of levelling up has remained very ill-defined for a very long time.
Yeah, so the government has published a policy paper on levelling up with 12 missions that they're trying to hit by 2030. So we simply took those missions ourselves and built the metrics around them. So we take a pretty holistic picture on levelling up. We look at lots of different metrics, not just economic ones, but broader things like well-being and your life expectancy. And using that holistic picture, we can say, yes, whether your area is narrowing the gap with London and the southeast, which is what Boris Johnson wants, or whether it's falling further behind. And as our reporting shows, most cases are falling further behind.
Joe, thanks very much. Bloomberg's Joe Mays, thank you for that. Now, staying with the UK economy unexpectedly shrank in the month of March as the cost of living squeeze forced consumers to cut back on spending. This puts doubt on the Bank of England's ability to keep hiking interest rates. Joining us now is Sandra Horsfield, economist at Investec Bank. Sandra, and you wonder, good morning, you wonder whether the markets are starting to wonder whether the Bank of England will be able to hike as expected. Yes, that was the sort of mean opinion, if you like, of the Bank of England policymakers last week. But there were dissenters on that front, some saying it wasn't the right path of action, and we see interest rate differentials perhaps pricing in that might not happen. We might not see so many interest rate hikes. How much opportunity to hike do you think the Bank of England has?
I think that's really the key question. How do you balance prospects of potentially weaker growth coming as a result of the cost of living crisis, denting real household incomes, against the very high inflation rates that we're seeing at the moment, and those becoming entrenched perhaps in wage expectations, exceeding productivity gains? And if you get that, then further interest rate hikes are necessary to stop those second round effects that policymakers are worried about. In our view, the markets had gotten them ahead of themselves in terms of the amount of tightening that can be expected. And perhaps some of that realization is now starting to be built in.
Matt, jump in.
Sandra, I'm reading that Boris Johnson has seemingly no plan to help Britons with the inflation they're facing, and that his level up promises have not come true. In fact, we're seeing a worsening of the inequalities in the UK. Is there anything the government should be doing to help citizens deal with the inflation that we're seeing? And is it fair now, 2 years on, to expect some kind of progress in leveling up?
It's a very good question. I think right now we're dealing with a situation where we have, against all of that, still the legacy of the pandemic and the very big fiscal help that the government provided at the time to get the economy through this experience. So now the question is, are we able to progress with fiscal consolidation, getting fiscal books back in order, or do we actually have to do more? At the current juncture, with a huge squeeze on real disposable incomes, we suspect the government will have to do more, and perhaps even sooner, but at the latest, at the time of the autumn budget, those hints are starting to come in.
Can I ask you about European growth more broadly then, Sandra? Clearly, there's a lot of focus on energy policy and what energy policy decisions will do to the German economy, to the broader European economy. And I spoke to the Commerzbank CFO earlier on today, who was saying, look, if we stop importing gas from Russia, that will cause a German recession. And there are plenty of economists who have similar views. What's your expectation for Europe?
Clearly, the euro area in particular is most exposed to the situation through energy, as well as through general trade linkages with Ukraine and with Russia, of course. We think, in general, what's one helpful factor that we're getting is we're actually having some coincidental fiscal support. The Next Generation EU funds are being dispersed, which so happens to be in this year when we have all these headwinds coming. That's one factor that will help Europe. If you look at company order books in general, they're still very high. But of course, if the gas taps are turned off, that will be a very difficult situation that can't be replaced in the short term.
Right, yeah, I got a similar message from the CEO of Siemens this morning. Thank you very much, Sandra. Sandra Horsfield, economist at Investec Bank. Thanks to her for joining us. And for more on all things UK growth, where we started that conversation, economics and politics and growth stories across the UK, be sure to check out our flagship news site, bloomberg.com/UK. That is live from today. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Anna Edwards. Now, Volkswagen is reviving the Scout brand here as an electric American truck to help gain market share in pickups. I spoke with the CEO of Volkswagen, Herbert Diess, about that yesterday, along with some of the challenges automakers are facing as a result of inflation.
We think that the United States is really the economy and market where we should invest a lot more. Now we are still very, very small in the United States, and we have now a good track record. We are profitable. We should use this momentum of electrification And now owning a real American brand and bringing it back to market is a huge chance. And altogether, those efforts should lead to a situation where by 2030, we should be around 10% market share, which is necessary to be sustainable in the American market. So we need the volumes, economies of scale, and we need to become more American.
Herbert, when you look at pickup truck, I mean, prices here just keep going up. Chevy just put out a new ZR2 of the Silverado that starts at 70 grand. The Ford Raptor, if you option it right, is at least 85 grand. The Ram TRX gets up to 100. What do you think about the incredible price increases that we've seen here? Are you seeing the same thing there?
Yeah, you know, that's what happens around the world currently because of raw material prices are really soaring. I hope that this is a transitional effect. In the battery cars, it's mostly the raw materials for batteries, which are not, those prices don't have a real substance, or because we have a shortage in the market. So they should come down on the midterm and long term to reasonable price levels. And then the EVs, the EV pickup trucks will be also a very economic alternative to the ICE cars. So if we enter, we enter, or when we enter at scale and at the right price point to be attractive to many Americans.
In terms of chips, when do you expect the supply-demand of chips to come back into equilibrium? You know, a lot of people said last year, maybe by 2022, and the beginning of this year, they said maybe in the second half. Now we're hearing 2023 and even 2024.
Yeah, you know, it's a combination. You know, we have very strong demand for cars worldwide, basically. And people want to spend the money on cars, and we have this shortage. We will see a big alleviation through this year, I would say second half, because I know that a lot of wafer production went into automotive in the past months. So I would say by August, September, we should see a much better situation. We will still see shortages in some of the components because building up additional capacity for semiconductors just takes time. It takes years. I think a lot of investment is going in now. We will see continuous improvement. Is it fast enough? Probably not.
That was Herbert Diess, the CEO of Volkswagen. And Anna, for those of you outside of the U.S., the International Scout was an amazing brand. It looked basically like a Bronco or...
so you tell me.
Just a really cool off-road truck, and it'll be cool to see it revived.
Herbert says that he needs to become more American, or they do. I don't know. Can he do it, Matt? You can tell me later. That is it for the early edition. Surveillance is ahead with Tom, John and Lisa. They'll be hearing from Christian Müller-Gliessman. They'll continue to talk about sell-off in stocks. This is Bloomberg.